Gabriel, thanks so much for hanging out with me today. I really, really appreciate it.
Yeah, Jeff, thanks for having me.
Yeah. I've been seeing your name around for quite a while now and popping up on other podcasts that I listen to and realizing we had lots of common connections. So I know you've been a guest on a lot of shows before. By way of like a little bit of an introduction, tell us like how do you get to be the guy who gets to be interviewed on all these podcasts? What kind of stuff are you doing? And where did you come from to get to this spot?
Yeah, usually I'll be invited onto a podcast to talk about seller financing. That's kind of how I started investing, in real estate and really started building my portfolio that way. Because I started with no money and had to find a creative way to buy real estate. And then, the first kind of how I ended up on a bunch of podcasts really is I've never tried to get on a podcast. The very first podcast I ever did was the Bigger Pockets podcast. Brandon Turner and I are in a mastermind together, Go Abundance. And so we met there, ended up on his podcast. And because just about every other real estate podcaster listened to Bigger Pockets being the number one real estate podcast in the world, I ended up getting invited onto a lot of podcasts. And it seemed like a lot of listeners were intrigued by the fact that you could actually buy real estate with no money down and low money down. And that's really how I got started. So I think that resonating with a lot of people going, hey, I want to build a real estate portfolio. I don't really know how, and I don't have money. I'm never selling anything. I don't have a book. I don't have a course. When I go into a podcast, really what I'm trying to do is just give as much value as possible. And if I can say one thing that'll make a difference in someone's life, then great. That's what I do. I really just to give back in a way. Maybe someone will hear something that didn't click before, they didn't hear before, that will help them on their real estate journey or their life journey. I love talking about life too and other things outside of real estate.
Yeah, that is awesome. I was saying, before we hit record, in so many words, I guess I feel like the real estate investing world is just it's massive, and then you kind of siphon over here like, oh, well, maybe seller financing, and then oh, a subset of that is off market seller financing, and a subset of that is like really relationship focused off market seller financing, and so it's rare and it's a special treat for me to get to talk to somebody who's like, because this is like a niche and a niche and a niche in some ways,
Sure.
and to be able to like I was saying before, to really be able to speak the language with somebody is a rare treat there. So when you got started with buying properties with seller financing, from my understanding, it was a little bit kind of like out of necessity. I'd love to find out what you're doing now that it's not so much out of necessity, but tell us a little bit about how those first experiences happened when you said where you ended up doing seller financing for the first time.
Yeah, well, even before, so my first three deals, I mentioned offline. So in '05 is when I bought my first house. And this is when banks were giving money to anybody. So I literally had no job, no money, no income. And the bank said, hey, we'll give you 100% finance loan. Prior to that, I was deployed over to Iraq and Kuwait for a year in the military. And I had decided then I was like, I'm going to come back and I'm going to buy a property, And so I come back, I go to the bank and they said, hey, you're approved. And I'm like, this is easy. I'm going to rent out two of the rooms, essentially house hacked it before house hacking was at least called house hacking. It just made financial sense. But even that deal, 2005 was a hot market. And this is where I realized real quick, like where relationships come in. So I started working with this real estate agent and I looked at all these homes and I was getting beat out by all these cash offers and all these offers above asking. And the realtor took me to a house that was a friend of a friend's son that was rehabbing this house. And I'm standing in this thing. I'm the only person that knows it's for sale. And I know that the neighbor across the street just sold their house for 20,000 more than what the seller would sell it to me for. And so I'm thinking nobody else knows this is for sale. And this was because of the relationship I had with the agent and the relationship he had with the seller. So I bought that. And then the second home, I literally made business cards after I owned one home saying I'm an investor. Because in my mind, I had already decided I'm an investor. And I gave that card to a guy at the gym that I was working out with. And again, it was an off-market deal. It was a friend of his dad that had this rental, didn't want to clean it up, and ended up selling it to me. Same thing, hot market. Nobody knew it was for sale. So I realized real quickly, like the more I opened my mouth and told people what I was looking for, the more deals would naturally come. So that's how I found those first couple deals. And then actually answering your question that you asked about the seller financing. So I did that '05, '06, '07, and I'm thinking like, this is easier than the books. I'm just going to go to the bank once a year, 20 years, I'll have 20 homes. Like, this is easy, no money down, as long as, you know, the property will cash flow more than what my, or rent for more than what my payment is. I'll just do this for 20 years. And then '08, I went back to the bank, and they just said, hey, sorry, guidelines have changed. You don't qualify. You actually have to have an income, a down payment, a job. You do not qualify for a loan. And I'm sitting there going, well, I've made payments every month on time. I've done what I said I'm going to do. I've bought in a home the last 3 years. They're like, too bad. It's not like that anymore. And so I had to get creative. And the only way I knew of was hard money, private money, and seller financing. And I knew nobody with money. I wasn't comfortable asking for hard money. And at the time, I felt like that was mostly for flippers, which isn't what I was looking to do. And so I thought seller finance would be my route. And so I got on Craigslist every night for about a year, and just started talking to sellers, just started having those conversations and learning the language and finding out what sellers really wanted. And after about a year, so 2009, I put together a seller finance deal. It was 4 units. It was 2 duplexes side by side. And at the time, I was working a minimum wage job, less than full time, and that fourplex and the little bit of cash flow from the other 3 properties replaced that income. And I decided to stop working right then. And so I was technically financially free, but I was still poor, and just focused my time and energy on putting more seller finance deals together.
Yeah. Oh, that's amazing. So if we fast forward, you know, you said 2005 was that first one. Like, what is that? 18 years now.
Yep.
You're infinitely more experienced, right? You're totally different life, financial situation, everything. So if seller financing kind of came from a point of necessity to begin with, tell us why. I'm guessing, you tell me if I'm wrong, but I'm guessing that's still seller financing a real preference for you today. Even the economy's different, everything about your life and your portfolio of business different. Why is it still your preference today?
Yeah, I like seller financing. I think I got spoiled, and I was really, really fortunate to not have any money. And I say fortunate to not have money because it forced me to get creative. And what I realized more than anything is just the power of leverage. Now, like real estate is the most leverageable asset on the planet, like financially speaking. And so back then, my only criteria was, hey, it had to be cash flow positive. So I was 100% leveraged in these assets. In fact, my entire portfolio sits at probably 50% LTV, but everything I've ever bought is like 90 to 100% LTV. My only focus was it had to be cash flow positive. So cash flow first was always my focus. And so really out of necessity, I wasn't afraid of that leverage as long as it cash flowed. And so it forced me to, you know, even when I started building up some equity, and even when I started having stronger cash flow and some liquidity events, I really looked at how can I stretch this dollar as much as possible. Can I put, if I'm going to put money down, I'd rather put 10% down on 5 properties and 50% down on 1 property to not only increase the cash flow, but that long-term wealth, which is what real estate can do for you. And so I've just kind of taken those lessons from those early days of investing with no money down, and do the same thing with these larger assets. I mean, a lot of the liquidity that I have come from those initial properties or those early properties that I bought. So I'm really just like recycling those properties into bigger, larger deals.
Yeah, that's awesome. And I love what you just said. I wrote it down. You know, they're fortunate to not have money. When I talk to people who are kind of in the mainstream real estate investing, you know, space, a lot of them seem to really prefer bank financing. And I think my observation or my theory has been really that it's because they can get it, that they feel like, oh, it's not necessary to learn about seller finance. That's something you do if you don't have better options. But I've really come to see that the seller financing loans can be preferable and superior in actually in lots of ways. And so back to your point of like, it was actually a gift for you to have that constraint. I feel like constraints are some of the best gifts that we can have because they inspire and they necessitate like innovation like that.
Yeah, it forced me to be creative. And then I think seller financing as a whole is way more creative than bank financing. So other than when you get into like commercial, kind of like larger commercial loans where the banks will have some flexibility and willingness to be creative depending on who you are as the buyer and the asset, you know, traditional financing, usually you're going into the bank and they tell you, here's what you need to qualify. Here's what the down payment is. Here's what the interest rate is. like they tell you the terms of the loan and you either qualify or not. So I think one of the biggest advantages of seller financing is you can actually be as creative as you and the seller can get. There is no restraints along, I mean, the interest rate, the price, the down payment's negotiable. I've done interest only loans. I've done direct principal loans. I've done seller finance deals where payments don't start for 6 months. A lot of those, like we said before, were no money down or low money down deals where most banks aren't going to say, they're not going to give you a thumbs up on that. And so just the ability to be creative in and of itself, I think you have so much more leverage and opportunity on properties that maybe wouldn't pencil very well with traditional financing, but you find a way to make them pencil with seller financing.
Yeah, absolutely. I always tell people that I have this visual in my head of like a mixing board at like an audio studio, like a sound studio. There's an audio engineer there, playing with all these little dials. And I always say like those dials, there's like dozens, hundreds of dials there. It's like all the different things that you could negotiate and fine tune in a seller financed transaction. Like you just said, like, oh, maybe interest. Here's the one that says like, when does interest begin accruing? Okay. And then the one next to it says, well, when do the payments begin happening? Which is probably connected to when the interest begins accruing, and the down payment, the interest rate, and all the amortization or lack thereof, and all these different things. There's so many different things that you can negotiate or tailor.
And I'd say a lot of times for a seller, it's usually one of those things. Sometimes it's more, but it's usually one of those things that are most important. It's rarely all those things. So it's usually like they're really stuck on interest rate, or maybe they're stuck on price. And sometimes it's a completely different aspect of the deal. And that's where it really goes to the relationship, like really finding out what's important to the seller. Because I think real estate, a lot of people think of it as transactional. And I know that we talked offline about relationships and how important it is. But I have a great example on a property where the broker had listed this thing as a development project, and the seller was getting some really strong cash offers, even close to asking. He just kept rejecting these offers. And when the listing expired, I had the opportunity to speak to him, and he was an older gentleman that said, "Hey, I don't have any family." I said, "Hey, I had asked him, like, I know you got some good offers on this property. It's a portfolio, it's a commercial building, and like 7 multifamily properties." And I said, "Why didn't it sell?" And he said, "Well, I really didn't want to be cashed out." And he said, "I'm 75. I don't have any family." He goes, "I just want income for the next 15 years. And I share this story a lot because I think it's so important. He goes, "I just need income for the next 15 years. And if I were to pass away, I really want this payment to go to this nonprofit organization that's really near and dear to his heart." And so what I found with talking to him for maybe 30 minutes is not even his own broker really found out what it was that he wanted. So they listed this thing as a development project. All these cash offers came in. He didn't want the taxable income of being cashed out. He didn't want to do a 1031 and actively have to invest. And he didn't want to go put that money in the stock market. And so for this seller, he was flexible on price, down payment, and interest rate. What he wanted to know is that he's going to be taken care of for the next 15 years. And if he passed away during that time, that those payments would continue to this organization that was near and dear to his heart. Nobody knew what he wanted. Nobody asked him, including his agent. So every offer that came his way, it was all transactional. They were making these cash offers thinking about what they think he wanted, but no one actually knew what he wanted. 30 minutes goes by, I find out what the guy wanted, and I was able to negotiate, not even negotiate, I was able to write up a deal with everything that he said was important to him and still made the deal work for me. And it was that true win-win. And that's the magic of seller finance.
Yeah, that is such a beautiful, perfect story, I think. We talk about on this podcast all the time about how you have to solve the person before you can solve the deal. You're never going to know what the best possible deal is that you could put together that meets their needs as well as possible and meets your needs if you don't take the time to do that. And what's so amazing is you just said, maybe it's a 30-minute conversation. I'm willing to invest lots of meetings and time and stuff with people, but it doesn't always require a ton of time. It actually probably required more of asking the right questions, listening to the answers, and maybe asking a good follow-up question or something. But everybody else, like you said, including the broker, they're bringing their own assumptions about what this seller wants. They're bringing these mass generalizations about like, oh, well, all sellers want X, Y, and Z. And you completely unlock that through asking a better question, listening, and then focusing on that relationship. I think it's a perfect story.
Yeah, it's 100% listening to what their needs are. Because I do get asked a lot, even on podcasts, it's, hey, what's your pitch? and the other thing is, how do you convince a seller into carrying financing? And the truth is, I've never pitched a deal to someone. I've never convinced the seller into carrying financing. I found sellers that already want to carry financing and they already understand the advantage. I asked them really basic questions, and I actually found this because I just didn't know anything starting off. So all those conversations I had for a year straight before I bought my first deal was because I didn't know. So I would just ask a seller, like, oh, what kind of interest rate are you looking for? Oh, what kind of down payment? Some of them say, oh, 50% down. And some would say, down payment's not very important. And so, starting off, because I didn't know, I just, out of curiosity, would ask these questions. And I found that sellers just naturally talked about what was important to them. And I'm just sitting back listening. And so even to this day, if I want to find out what a seller's needs are, I just ask them why they're selling, what kind of terms they'd be interested in, and then I listen, and then I just take the information they give me and say, based on the information they give me, can I put a deal together that gives them what they want and still works for me as a buyer? Sometimes it does, and sometimes it doesn't.
Yeah. Yeah. It's so funny, that question of how do you convince somebody, that comes up all the time. And it's interesting, just the upstream of that question is this assumption that you have to convince people. And it's so, no, me neither. And to me, that actually wouldn't feel good anyway. That would feel a little bit on the gross side. So I have my own theory, or I have my own answer to this question, but I'm curious what you probably meet a lot of people who are like, man, Gabriel, geez, I've been trying to do seller financing. I've made a lot of offers. I've talked to a lot of people. Nobody will take me up on this. I just don't think it's that common in my market, things along those lines. What do you think is sort of like the main maybe mistake in like tactically or strategically that people are making that's sort of leading them to hit this brick wall over and over again?
Yeah, I mean, I think some of it goes back to what we were just talking about. I think thinking in terms of what you want as a buyer, rather than really finding out what the seller wants. I mean, I was told the same thing. Everything I bought 09 through 13 was no money down seller finance. Everything. And people told me the same thing. Any agent I talked to was like, oh, sellers don't seller finance deals anymore. That's not a thing anymore. That was common in the 70s. It was common in the 80s. Like that's what used to happen in the early 1900s. Now a lot of agents and brokers I found really early aren't investors themselves. So they're not looking at it through the eyes of an investor. So I think for one, those that say it's just not a thing anymore, or sellers don't want to do it. I don't think they've had conversations with maybe the right sellers, and you have to just not look at it through the lens of what do I want. It's building a genuine relationship. Like when I meet a seller, I don't care if they sell me the property or not. I'm not trying to convince them to sell me the property. If they're interested in selling and they know and like and trust me, and I don't care if they want to sell me that property tomorrow or next week or next month or maybe 10 years from now, or maybe 10 years from now I'm not buying that asset class, but at least I'm on the forefront of their mind when they think about, hey, maybe Gabe's interested in buying this. And so I don't leave it. I'm not this guy that comes in and says, take it or leave it. Here's my offer. And I know people that do that. They're like, here's the cash offer. Here's what you would all the interest you would make seller financing, and they're showing up with contracts in hand. I don't do that. In fact, a lot of my early stuff, it was all just verbal confirmation, almost. And I'm not advising that this is the best way to go, but I never had anyone back out of a deal just because it was on a handshake and not on paper. And so it's just keeping the human aspect to it.
Yeah.
It's just keeping it very human, very relational.
Yeah, absolutely, man. Well, this is validating for me that we are totally speaking the same language, because I mean, so many, like almost word for word, some of the things you just said are the things I'm beating my listeners and my coaching clients and stuff over the head with. I mean, like this is not a take it or leave it situation. And my belief, what is exactly what you just said, is like, it doesn't go well for a lot of investors who are trying to buy seller financing because they're just making it all about them. In fact, they might as well like walk into the room wearing a t-shirt that says, I want to buy your property with seller financing because that's what's best for me. And it's like, gosh, if you just hide the t-shirt and, even though that's true, you do want to buy their property with seller financing, take a few more minutes to kind of come back around to it. And you'll probably help the seller realize that that's kind of what they want even as well.
Absolutely. And I think too, a lot of times, and I don't know if it's just the mindset of newer investors not thinking that they can buy larger properties, but I think a lot of people think, okay, single family homes. So they're thinking that maybe they are trying to talk a an older couple out of their home, right? And so I've never bought a property that was someone's personal residence. In fact, every seller who's ever carried financing for me, they're investors themselves. So not always, but it's usually been men and women in their 60s or 70s who own multiple assets, who have built up a significant level of wealth and to some amount, and they're already experienced there. So the reason that they are already familiar with seller financing, they probably bought that way or they sold that way before, and so these are investors. And so to me, it's a lot easier too to talk to a man or woman who they're investors. They own the asset. They've owned the asset for years, and they're just tired. Like they don't want to cash out. A lot of times these sellers have self-managed and they're just burnt out. They've been landlord, they've been maintenance person, and they're just ready to have a new level of passivity. And for a lot of these sellers, seller financing is that way for them to have that level of passivity without the headache of the property. And I think a lot of new investors are thinking single family homes, and that they are trying, and they think they're not only are they thinking they have to convince someone, that they have to convince someone to sell their personal property or get them out of their home some way. And that's just not the approach that I've ever taken. And I've never bought anyone's personal property.
Yeah, absolutely, 100% same. Yeah. Well, and the other thing too, obviously, about the absentee owners is their capital gains tax situation is going to be a huge motivator. That's different than would be the case for most owner occupants as well. Yeah. Gosh. Okay. I love it. So one of the points, I guess, I think we've hit on it well, but I just want to make it really clear for everybody, is this idea that like this relationship focus. I have a feeling that you are probably like me in the sense that like the relationship focus actually just sort of feels better, feels more authentic, more natural, more human. But then there is this really practical side of it too, which is that when you focus on the relationship oriented approach, it's not just that you're being more ethical and warmer and fuzzier, which all of that is true too, but it actually really creates a lot of you will create better deals for yourself by unlocking them in that way too. Do you agree with that too, that there's a real practical side to this as well?
Yeah, absolutely. And I think too, finding what works for your personality or your lifestyle. I do have a lot of friends that invest in real estate, and that are very successful. And I know some that every deal they ever bought is from a wholesaler, or others they do the mass mailers or the auto texts or the auto calls. And I'm not saying it's right or wrong. That's just not how I've chosen to network or build my relationships. For me, my personality, for my lifestyle, I like a lot more of kind of an organic, holistic approach. It feels I do good in kind of that free flow state versus like systematic. You have to send X amount of mailers to X amount of people every single month. I know people that are very successful with those kind of campaigns. It's just it doesn't feel like a good fit for my lifestyle and the way that I try to build my business. And so I not saying that you can't be successful doing that. For me, I just want to be on top of mind when people think about, hey, I'm thinking about selling these properties, and that's where every deal that I've ever done has come from, is just a very organic relationship. And sometimes they're not deals that I even end up pursuing, but I'm the first one who gets the call to say, hey, are you interested in this deal? And it's because they know that I invest in real estate. And so they know I'm not going to sell them on something. I mean, I had someone reach out that I went to high school with, that I hadn't talked to in years. We weren't super close. And he said, hey, I know you own a lot of real estate in the area. Our family's thinking about selling these apartments. Would you be interested? And so, and I didn't end up buying these. We just couldn't come to terms. But the fact that he thought about me first before they went to go list it, and he knew that I'm not an agent and broker, so he knows I'm not going to try to get a listing from him. He knows that I'm not going to go try to flip these properties to someone else. It was just a genuine hey, I know you buy real estate. Is this something you're interested in? And even though that particular deal didn't work out, many have, and a lot of it's because people feel comfortable saying, hey, I know you invest. Do you want to check this out? And that's to me what fits and works really well for my business.
Yeah. Yeah. I love that. It just got me thinking about Yeah, relationship. One thing I like to think about myself is like relationship is like a form of currency. So you talked before about like no money down. So I always think that there's like five currencies. There's money, time, knowledge or expertise, energy, and then relationship. And so to me, when I hear somebody say no money down, it's like saying I'm structuring a deal without a lot of the currency of cash or capital, but I'm using other types of capital, like relationship currency. The fact that you even had that opportunity was a fact that's like you had made a bunch of sort of deposits directly or indirectly in like the relationship capital piggy bank, really, that created that opportunity for you, and then create some of these no money down deals that you have done in the past or even continue to do today.
Yeah, absolutely. I mean, one of the first seller finance deals I did, I used to hand deliver. I used to hand deliver the mortgage payment every single month. The woman that sold me the property also had a brick and mortar business in town, and I used to just hand deliver that mortgage payment just to have that FaceTime. And so, her and her husband owned multiple properties. So then, when they wanted to sell another one, who do you think they called? We had that trust, we had that relationship, and so they didn't want to go market this thing to someone else. They didn't want to go hire an agent. They just said, "Hey, are you interested in this one too?" And it's like, "Yeah, of course." And interestingly enough, and I share this story a lot, is 6 years later when I went and refinanced those properties, she became my first private money lender. So I did a big refi, refied out all these seller finance deals, and she had said, "Hey, what am I going to do with all this money?" And I had never borrowed private money, and I said, "Hey, you can lend it back to me." And she kind of thought I was joking. And a couple months later, I had a property in contract, and I was going to get a hard money loan on it. And she called and said, "Hey, were you serious about borrowing this money?" And I said, "Absolutely, I can put that money to work." And so she became my first private money lender. But a lot of that is because we had that 6 years of trust, 6 years of me making a mortgage payment on time every single month. And so again, it was the relationship, not so much the transaction. We already had that trust. She knew that I was going to make that payment every month on time, and it's a win-win. She gets to kick back and get mailbox money, and I got to take some of that liquidity that she had and go put it to work and buy more real estate.
Yeah, that's awesome. That reminds me too of something I feel like I even need to remember this a little bit myself. Um, that when we can get the seller involved in the financing, even if it's a small amount, like let's say they're going to like carry back 10% or something like that. We're going to go get a bank loan for them for the majority of it, put a little bit down, and they're only going to carry back 10%. Well, I think a lot of people would look at that and say, what's the point? It's only 10%, this and that. But I mean, I think what you just said illustrates one of the main reasons why that's still a very valuable thing, because now you have established a relationship with this person on in that context. I guess you already had a relationship with her as the seller, but in this case, you have now this relationship with her where she's the lender. You have the opportunity to be in touch with her literally on a monthly basis for years. And she becomes your best candidate next time you have a new opportunity for someone to fund something. You give her a call back. So I think that I hope that that's encouraging to people to pursue seller financing, even if it's not like the whole deal.
Yeah, no, absolutely, absolutely.
Yeah. So just to pivot for a second into like where we are kind of today, like as we're recording this right now, I think maybe just to step back, I think everything we're talking about here is totally timeless. In some ways, it's hilarious. Sometimes I think like what I preach now is like exactly what could have worked for my grandparents as well. But
Sure.
of course, we're like a little bit, we always have to be in the context of what's happening right now. So as we're recording this right now, we're what, I don't know, eight or 9 months into kind of a dramatic like shift in the marketplace, right? It went from being sort of an extreme seller's market to going a little bit more in the other direction. Interest rates are higher. So how do you feel about seller financing as it sort of contextually applies to right now and what is sort of a changing market, and maybe even in the context of like, are your own plans, strategies, or anything
Yeah,
evolving a little bit?
yeah, it's a good question. I mean, I think I personally think it's always. Sorry, my dogs are going crazy. Yeah. I think it's always a good time to buy, right? And it's the fundamental. I don't think the fundamentals of real estate investing change. I mean, I think there's investing and there's speculating, and people have made a lot of money speculating. But speculating, hey, you buy at this price and values go up. And even though I've built a lot of wealth through appreciation and that long term equity, that's not why I invest. I invest for the cash flow, and so I still make sure to this day that the deal works when I buy it. And so, I'll buy in any market, down, up, sideways market, as long as the deal makes sense. I closed on a property 2 weeks ago, and I made more purchases in 2022 than I had any other previous year. As far as seller financing, I think because of where interest rates are going and because of banks tightening up, there's going to be more opportunities to buy with seller financing. I get emails every single day for the last 6 months of motivated seller, possible seller financing. I think we're at a weird time where buyers still want this incredible, crazy discount and sellers want top dollar. And so I think it's going to take some time for that to settle. But it still again goes to relationships and conversations. I sold several properties last year with seller financing. It was the first property I sold with seller financing. I sold it because I got the price I wanted. I gave the buyers really great terms, and they're buyers that I know, like, and trust. And they're buyers that can go in there and do to these properties what is not my best use of time and money and energy. And so I can go put larger deals together. They take over these properties, in a couple, and in 2 years, I have a good payday. But it's a win-win. That deal is going to make this couple million, make them millionaires, and so yes, it's a good time to buy or sell with seller financing.
Yeah. Yeah, that's awesome. I do
I
think
think that answered your question. Sorry, I kind of went on a tangent there.
no, absolutely it does. It does. I find that it's like so many people in real estate investing who haven't done much in seller financing yet. They bring this mentality that says sellers only sell with seller financing when they don't have any other options, right? It's like it's a last resort kind of a thing. And thus they feel like this last chapter of, say, 7 or 8 years or whatever it was, that was a seller's market, like they were thinking, oh, there was no seller financing. But obviously, that that's not true. I know that's not true, because there were always sellers who wanted to have a continued income stream from the property, didn't want to have to buy a replacement property in exchange, but wanted to defer capital gains, all of those types of things. But then now there might be this sort of added second layer too, which is it actually might be harder for them to sell some of their properties, or to sell them for the prices they want to. So in my mind, it's like there's like maybe all the reasons are available kind of right now or here in the near future for why seller financing will probably be a great tool for everybody involved.
Absolutely, and I think it also depends on where the buyer and seller at in their investing journey. So, like the properties I sold, they're great properties. In fact, I have low interest fixed debt on them, and so they're not properties I have to sell. It's just I'm 17, 18 years on my investing journey, and so I look at my portfolio as a whole, and these particular properties I'm looking at going, over the next few years, these are going to have quite a bit of deferred maintenance that needs to be taken care of. But I also have a lot of equity in those properties, and that's really not the best use of my money to sink them into these small multifamily properties. The best use of my money is go putting that into larger deals. Now it's still a win for the buyers because the buyers only have a couple properties, and so for them, this is changing the entire landscape of their investing journey, because they're able to go in. It was 4 properties, 13 units. They had the skill set to go in there, rehab them, clean them up, maximize rents. So it's a true win for them, and it's a true win for me. And I'll have a great payday in a couple years. I don't need that money right now. And so I got what I want out of the deal, and they got what they wanted. And it's a true win-win. And I think we'll see more people. I will potentially be selling more properties that way, just because it's really just taking the equity and putting it into another deal. And so if I can maximize the sale that way and help someone else get into that property, it's a win for them. It's a win for me.
Yeah, absolutely. So as we begin to wrap it up, I've got one final question for you. But before that, even, I'm just curious. So today, in terms of where you are in your whole journey, my understanding is you have a good variety of different sort of types of properties and even locations and things like that. How are you these days, I guess, defining what your target criteria is, or what are the common denominators even maybe across some of the diversity of the things that you are currently buying and owning today?
Yeah, it's shifted through the years. So in 2019, I really focused in the mobile home park space. And a lot of that was I really was going to shift into multifamily, and I felt just like the returns, the cap rates were getting condensed down to nothing. And so originally I was just looking for better return, but it was the same model of, I wanted a high cash on cash. It was cash flow first. Now a lot of these, I've had the opportunity, especially in the home park space, get the expenses down and the revenue up, and been able to create a lot of value there. But I don't singularly focus on one asset class. I kind of go through like micro times where that is my focus. Like when I was buying mobile home parks, I stopped looking at all single family, all small multifamily, and it was just mobile home parks. But since then, I've shifted into commercial industrial type properties. I really like that asset class, and I don't think one asset class is better than another. And I don't think you have to specialize. I don't raise capital. I'm not a syndicator. I think for these syndicators, they need to specialize in the sense of, if you're putting your money into someone else's deal, let's say it's self-storage, you want them to be the best and know the most about self-storage. But when I'm investing for myself, I'm investing in assets that make sense. I mean, I know people that are kicking ass in every single asset class. And so for me, it's more about being an opportunist and finding opportunities that may be different than my current assets now. And so I like the industrial space. I like having strong commercial tenants. These commercial tenants are business owners, and a lot of them are doing crazy amounts of revenue, or they've been in business for a lot of years, and they're signing leases. So a lot of the strength of the deal is based on the tenant, and based on how strong the leases are. And some of that is, I feel like I'm at a place where I can sell a property or use some of the equity in the property or some of my liquidity to do these larger deals that maybe 10 years ago I didn't mentally have the capacity, or maybe the know-how to put together. I don't think the bigger deals are that much harder than the smaller deals, and so my focus today is still the same: high cash on cash return, strong asset that's going to produce cash flow.
Yeah. All right. That's awesome. That is very cool. And I think that one of those last points you made there is something we all need to remind ourselves of more. And I'm definitely speaking to myself when I say that, is that the idea that the bigger deals don't necessarily take a lot more work, or aren't necessarily harder. I'm always trying to balance personally, like this idea of, I think I know my sweet spot in terms of like what part of this whole business am I best at, and I want to try to do more of that and less of the other stuff, right? But then there's this healthy tension between that and then kind of thinking bigger or doing bigger things too. I don't know if you've experienced, any of that, kind of deciding like just the healthy tension between sort of specialization in a sense and spreading your wings to different things.
Yeah, I think it's I know a lot of people that specialize, and it makes sense for certain people in certain arenas within real estate. I mean, if you're building a business around flipping houses, like flipping single family homes, then you should probably be the best at knowing single family homes, or the self storage scenario. If you're the guy that's raising hundreds of millions of dollars for self storage, you better be the guy that specializes in that. I haven't put money into other people's deals before, and so, but if I was going to put my money into someone's deal and they're a self storage person, or they're multifamily, I would want to know that they are the best at multifamily, or they're the best at self storage. When I'm investing for myself, I want to feel comfortable with the deal, but I'm not feeling like I have to know every single thing about that asset class. Every asset class works. Every asset class you can be successful investing in that class. A lot of it's just it's math and intuition. I like to have a variety. I like to have my assets spreading out into different states. I want different asset classes. I love my mobile home parks, and there's that balance of my first single family deal gave me the confidence and experience of the next one. My first seller finance deal gave me the experience and confidence for the next one. First mobile home park deal, the confidence to do the next one. And so there's this balance of experience and confidence. And when I go into a larger deal or a larger asset class, I kind of like, if I'm not just a little bit uncomfortable, then I don't like that. I don't want to be comfortable. I like to do take on deals where I'm like, all right, this is the largest deal I've ever done, or this is a new asset class. It should be a little bit uncomfortable. And I've never bought a property that I regret buying. I mean, every property I've bought has had a certain level of yes, it's performing. Yes, they're performing well, and I have to learn stuff as I go. There was a lot of stuff in the mobile home park space that I didn't know. There's a lot of stuff in the industrial space I didn't know. Now I know. Now I feel comfortable going into that next property in that asset class.
Yeah. Well, and I think that learning new things keeps it interesting for us too, right? And if we're being honest with ourselves, entrepreneurs need to stay interested, or else bad things tend to happen if we get bored or we start to check out mentally. So I think that's pretty cool, learning new things. All right, cool. So just to put a bow on this before we sign off for today, I think it's safe to say that if someone's listening to this show at all, and especially, this episode, they want to be buying properties off market with seller financing, relationship focused approach. And, a lot of the folks listening are probably like on the early-ish part of that journey. So I guess I would just ask you, like, really broadly open-ended, when you get the opportunity to talk to somebody in that spot, that's what they want to do. What's like the number one kind of encouraging thing that you would like to leave them thinking as they sign off today?
Yeah, usually when I tell people, I tell them they need to have as many conversations as they possibly can. They have to let people know what they're looking to do. And a lot of people, a lot of people won't. A lot of people are intimidated to say, hey, I'm going to invest in real estate. But I can't tell you, almost anyone that's actually taken that advice and gone out and told people, they've started having conversations. I've had so many people come back and be like, oh my gosh, I had no idea my next door neighbor I've known my neighbor for 10 years. I had no idea they had 5 rental properties. But once they were on a walk and told them, hey, I'm going to start investing in real estate, then their neighbor's like, oh, that's interesting. I have 5 rental properties, right? And so it's the more conversations you can have, you're going to naturally find that. And, the example I use is like, I had nobody in my circle, nobody that had money that invested in real estate, that was in business. But as I started speaking that, and as I started putting that into the universe, like, it naturally came back. Like, I attracted those kind of conversations where I feel like that I don't even focus a conversation on investing in real estate. And a lot of times it naturally goes there because people say, I hate the question, oh, what do you do? Right. But people ask, well, what do you do? And usually I say, I just live my life to the fullest, or something along those. And then that creates a very interesting conversation. Well, how do you make your money? And I invest in real estate. And so the more people you can tell, the more opportunities you're going to have. It's very unlikely someone's just going to say, hey, here's a property, you're interested in buying it, if they have no idea that you invest in real estate. And so you have to start, like, I can't stress that enough. And I've watched people do it in like 2 days where they're like, oh my gosh, I started telling people that I'm going to invest in real estate, and this person I work with, and this neighbor, and my mom's neighbor's friend. Like, it's just crazy how once you open your mouth, those conversations kind of organically happen. And then that's how you create, being on someone's mind of, oh, hey, well, I'm thinking about selling a property. Maybe this person's interested. But had you not opened your mouth, they're not going to know you're interested. They're not going to just say, oh, here's a property, I think you want to invest in real estate. You gotta let people know.
Yeah. Oh, beautiful advice. Beautiful advice. Thank you so much for that. And thank you for being here just in general. I mean, I think being a guest on a podcast is like an act of generosity. You're contributing so much of your own, hard fought experience and time and there's so many other things you could be doing today. If people, well, thank you. If people want to keep up with what you're doing and, or hear other shows you've been on or anything else you're up to, what's the best way to keep in touch or follow you or whatever?
Yeah, Instagram is the best way, just at Gabriel R. Hamel. I'm off and on active on there, but I'm on there. So if I do a podcast or something, I throw it on Instagram, and that's the best way to reach me.
Okay, fantastic. Well, thanks again so much for being here today. I personally got a ton out of this. I can only imagine how much all of our listeners are going to get. So thank you so much for that.
Absolutely. Happy to do it.